Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the sterling versus US dollar ahead of the Bank of England rate decision tomorrow morning at 7 a.m. What are the technicals saying? What levels are going to lead the roadmap to and through that decision? We'll talk about that in this video, so let's get started. When you have a key event, it's best to understand the roadmap ahead. That is, what levels are important, not necessarily in the close or the minutia, but what if we moved higher or moved lower? What would give that pair either more bullish or more bearish bias from current levels? So when I take a look at the hourly chart of the sterling versus US dollar and anticipate some sort of move away from this area right now, near right around the 125 level, there are a few things that are in play that are make me interested. One is fairly close, admittedly, at 124.64. It's still about 30 or 35 pips away. This swing area comes into play. Now, this swing area was a ceiling here, moved lower, moved lower, moved lower. Moved modestly lower. You can see it as losing momentum, moved above it. We had actually two instances where the price moved below this area, this old ceiling area, but bounced back, and then we started to use a level as support again, there, and even today in trading today. So we had all these levels where we had support against the level or resistance against the level, and that comes in at 124.64 to 70. So if the price were to go lower and get below, let's say the 100 bar moving average, this line right here, and get below this level, that would open the door for downside. We would be below this floor right through here, and that should open the door for further selling. And the next target area would be this wider area down here, where again we had a floor developed through here, failed below that level, reestablished the level as support here before moving higher, came up to that level, found sellers, and then moved above it, and then found support buyers against this level back here. Now, this is, going back a couple weeks, so we haven't been at this level in a couple weeks, but getting below the 124.25 to 124.04 level, let's call it 124 on the downside, would open up the door for further downside potential. So the roadmap to the downside involves getting below 124.64 and then getting into this 25 to 04 or 5 level. Let's call it 124 level, and breaking below that level would open the door to the downside. That's that roadmap. Now on the top side, what do we see on the chart here? Well, if I look at, let's say, this whole area right through here, what do we have there? Well, we have the 38.2% retracement. That's of the move down from going back in time to, well, let's go back to it right here. This is the March high down to the low that we saw in April. So that would be the one of the levels that would be in play. We also have the 200-hour moving average. That's this green line right through here, which is going sideways. We have the 100-hour moving average. That's this blue line, which is now trying to go sideways. And then we have the 200 bar moving average on the 4-hour chart, which is coming down and approaching the 100 bar moving average. And then finally, we have the 200-day moving average. So there's a whole cluster of resistance right here between the 125.25 level and 125.44 level that would need to get above to increase the bullish bias. So that would be the roadmap to the upside for this pair. When we do that, when we start to look toward this swing area through here, and then we look up toward this other swing area up through here, including the 50% retracement, those would be the targets on the top side for this pair. So it gets to here, it gets above there, it moves up toward the 50% retracement, and then we'll see what happens at the 50%. By the way, earlier this week, the price came up to that 50% and found willing sellers against that level. On Friday, we didn't move above the 50% retracement level on the employment data, and then rotated back to the downside. So that 50% has some history. More this week in the high for the week, we do need to get above that level to increase the bullish bias. So with that analysis, we now know the roadmap for the sterling versus US dollar. We're in between support, we're in between resistance. That's okay. We're expecting a move. We're wondering if that move is going to be trend changing or give us some momentum in the direction, and the roadmap is going to shows those levels that we need to get to and through, either on the upside or downside, to increase the bullish bias or the bearish bias for the sterling versus US dollar. I hope you found this interesting. My name is Greg McCloskey. Good fortune with your trading. Bye bye now.